low can you go? How low can you? Citigroup, C ticker, probably the New York Stock Exchange. And look at that on the monthly chart. Top, 2007, right here. The highs of the highs, November 1, 2006. And after that, after you had that close below 12-month moving average, below horizontal breakdown line, timber never to come back. Another horizontal breakdown line. You don't want to be there if you're below the 12-month moving average. That's a long-term downtrend. Down, 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 down. You see it start breaking down way before September 2008. Already had crashed before, right here. When the rest of the market picked up in October 2008, September 2008, it was already 3/4 through, 2/3 through its run. And then it just needed a long time to base. And within that base, had some moves. And here's where we're today, guys. I got an alert. Let's check it out. Monthly defined breakout line. Monthly defined breakdown line. Patterns within patterns. So here would be the first target if we have a close below 66. And where's my more conservative target? Right here. And the first target, more probable target closest to the breakout line would be all the way down to 59. Oh, what bad? What? Okay, let's try the line here. See this target? 59. I would probably move it up to 60. Sometimes I'm just not precise when I just do my initial estimations. Previous resistance turns support, now a wall. I'd like to put that target right above that support, and you're going to start hitting support here all the way down here. So you want to get triggered out right there. And usually what happens is you probably have the 12-month average starting to go downwards, and when you hit that support, you get a bounce back close towards the 12-month average, back close towards your previous support, now turn resistance. And then after that, you go down. And if you need to test some more, you do. Then continuation breakdown off the 12-month average. And then you head out to the further away targets. So before you go through, you could go through one big candle through this congestion area, this support that starts here all the way here. But you have to estimate that if you stick around for this bigger target here, down target here, then you're gonna have to go through some hits, maybe sink through a little bit, go back up, and then every time you go back up, well, you have a potential of for it not to be just a pullback, reversal, and then go back up. And then after that, you say, what did I do? But when you're in a downtrend, that's when you have the weight of evidence, 12-month moving average going downwards, pullbacks and contracting volume, increasing volume on the way down, horizontal breakdown lines. All these things, when they add up together, you increase your chances of pullbacks just being regular pullbacks and then continuing downwards. And after that, it's just a question of time, right? 12-month candles, monthly candles take a long time. So if you have to wait 1, 2, 3, I don't know how many candles here for this to play out, 8, 6, 9 months, you could be in here for a while for you to eventually reach that further away target. So that's how I see it on the monthly. 12-month average is starting to go downwards. Price action below 12-month average, creating pressure downwards. You have more chances of the 12-month average to continue downwards than going upwards, right? Because before you go upwards, you actually have to flatten it out and then go upwards. So that's 2 steps to go there, and now you're already in the step going downwards. Oof, Citigroup, not nice. All right, Stan Weinstein on the weekly. Remove. Oh, okay, here's my monthly defined breakdown line at 66. 66.30. Let's clean that up. My monthly defined breakdown line. My weekly defined breakdown line just about here. Pretty much the same. Most of the time it's different. I have another breakdown line right here on this closer pattern to the breakdown line. Look at that green. That was nice, right? Beautiful stage 2. Sometimes you had pullbacks on increasing volume, but it just made you churn for a little while. Always staying above the 30-week moving average. Never challenging it. It's just beautiful, guys. Moving your sell stops along the way. Tack, maybe here, even here. Oh, this one, you see, you want the pullback to come really close to the previous high before you move it up. If you get too early to move it up your sell stop, you get a chance of getting triggered out. Either case, you could have put it there, maybe. Then you would have got triggered out here. That would have been your run from here to here, or else you would have put it here. You would have still been in. Oh, see, back up here, move it up here, and then you would have triggered out here. That's a trader's way. Investors, same thing, but always under the 30-week moving average. And would have been triggered out here. Whenever you close below the 30-week moving average, you want to get out. And then after that, you have the trend line violations. 1, 2, 3, 4. Stan says a break on the 4th, you're out, and you would have exited right here. So all these techniques, these symbols, people looking at a moving average crosses, moving average closing below them. It all adds up that these are the warning signs that you should get out. It's not like, oh, I have to get out because it crossed that well. The price action is getting closer to the 30-week moving average. It's starting to flatten it out. The momentum's slowing down. You're getting closer and closer to the Ichimoku cloud. All that adds up that it's time to the run's ending, or it needs a lot of consolidation. And when you're below, you just don't want to be there. So right now we could have said stage 3. Oh, let's short it, Pat. Let's short it here. Well, you're not out of the Ichimoku cloud, guys. You see, that's that thing I picked up from stageanalysis.net. Oh, look at that, all that noise. Let me remove all that. The price action actually, stage 4 territory, underperforming the SPX, price action below 30, under the 30 average, 30 average going down. But look at the Ichimoku cloud, how it's holding it up, guys. See, sucking it back in, and you don't want to get trapped here. Then you get another push upwards, even if you don't make it out. I don't know where you would have put your sell stop, but this pretty high wick could have triggered anything here, anywhere you would have put it here. You would have been triggered out unless you would have put your sell stop above the previous high. But it's not a good place. Position size would be way too small. And that would have made you think like, I'm not really optimizing my risk to reward, guys. And even here, if you would have put it, you would have been triggered out. So respect the Ichimoku cloud. Then we're getting another run upwards. But look at that, guys. Time moves on. Churning happens. Market digests. And then look at that. We're back below 30 average. SPX going down, underperforming the SPX. And now look at that. No more Ichimoku cloud. So as long as we close below that 66.30 on the monthly, and even now, we want to close just a little bit lower, 65.60 on the weekly, and that's our last support. So if we get a weekly close below here, if we get a weekly close below that line straight, below the 65, below the 66. If we had a monthly close below the 66, and I think we have a 1 week left or 2, and especially if that volume could keep picking up, that red volume, big warning signs right here, I think this is a short, guys. So we had those monthly targets, and if you played the Stan way, then it's going to be the same thing as going up here. The price action is going to start going down. Hit some monthly defined resistance or weekly defined resistance right here about. pull back. You could enter here, continuation short on if it's on contracting volume. And then after that, go down to the next time it hits support, pulls back up, etc. Then you move your sell stops along the way. Looks simple, right? Well, it's very hard to apply. So you really got to believe in the system. You got to reduce the noise. You got to focus and just observe, and make sure the weight of evidence is always in the direction that you're playing, guys. There's another thing that could happen, though, in stage 4s is fear. Stan mentioned that. Is these pullbacks don't always happen. Greed takes up, builds up like this, ladders. Oh, okay, I'm going to go up, buy some more. Oh, it looks stable, buy some more. Oh, but when it goes fear, it could just go kaboom, one shot. See that? Longer red candles. But that's part of the game, guys. All right, so just check it out. Really close to full meltdown for Citigroup. And keep an eye on it. All right, ciao, guys. All right, see ya.